All
Well,
right.
welcome back to my channel today. This is John Mazzara with Remax Results. I have a special guest, and we're going to learn all about title today. I have Dan Flath with All American Title. He's the closing operations manager. He's going to explain the whole process and go over lots of fantastic information. I'm going to throw the ball here to Dan and let him run with it. Dan, please.
Well, thank you, John. I'm just so happy to be here today. I'm a self-described title insurance nerd, so I love this stuff and I try to make it interesting for others. What I'm going to do today is I'd like to go over what is a title to real property. Go over that. I'd like to share a real bird's eye view of the process that a title company goes through to insure a property. And then I'm going to share a few stories of where an owner's policy for title insurance saved the day. Okay.
Perfect.
Well, first of all, what the heck is title, right? What is title to a property? I always think that in like old movies and something, they always have a piece of paper. Title is that piece of paper. And that is what people think title is a piece of paper. Well, it's way more interesting than that. The best description of title that I'd ever been given was title is a bundle of sticks. And it's the collective bundle of sticks that constitutes title. So, John, what do you think, like when you think of title, what do you think one of the sticks are in this bundle?
Well, the chain of way back to when Minnesota was a state, back when it was a land grant from the federal government, I suppose.
You got it. Yeah, the patent. And so there's this concept of a chain of title. It's the land grant to the first owner, to the second owner, all the way to A to B to C to D. In that chain of title, the one who's last in title is the fee owner. And the concept of chain of title, if any one of those links is broken, it wasn't done properly, it breaks ownership. So one of the main sticks in the bundle is I own the property. Okay, I own the property. But then you have other sticks in the bundle. When you look down at the earth, you think, well, is there gold there? Is there oil there? Taconite, if you're in the iron range. And so mineral rights. So I own the property subject to the mineral rights, which are typically owned by the state. Okay. And you look up, and I'm like, theoretically, you own the property all the way to the core, and you look up and you own it all the way to the moon. Okay. But there are certain limiting rights, airline rights to the property. So I don't own and I can't build to the stratosphere. Okay. And so you have mineral rights and height requirements. Then you start to think of things like easements. Now, easements give somebody the right to use the property. So utility companies have an easement. I own the property subject to the easement across the property that allows power lines, gas service, and water service to be delivered to the property. So that's a stick in the bundle. Homeowners association. I own the property subject to the homeowners association ability to levy monthly fees. Government, taxing authority. I own the property, but the government, the state of Minnesota, has the right to tax the property. They have another stick in the bundle. And then you got really kind of things that are there, they're there, but only nerds like me think about it. Like homes just don't go right up to the street. Okay. That's because there are certain zoning requirements, setback requirements. I own the property, but I have to keep the property and the improvements in a certain area to be compliant. So these are some of the sticks in the bundle. Others that are what I would call voluntary. I own the property, but I didn't have all the cash to buy it. So I decided to get a mortgage. And the mortgage company puts a mortgage on the property and then grants me money. It's their collateral. So the mortgage company has a stick in this bundle that they retain. And then you have different ones like mechanics liens, which are contractors. If they don't get paid, they can file a lien against the property. So there's a concept of voluntary sticks and involuntary sticks. So voluntary is a mortgage. I agreed to put it on the property, or like, and then involuntary, it usually derives from a court. So I didn't pay my credit card, so the credit card company got a judgment against me, and that's filed against the property. That's involuntary. A court determines that, hey, you didn't hold your end of the bargain up, and a stick in that bundle is now retained by the creditor. So it's this collective bundle of sticks that constitutes title. All of it. Some of it runs with the property. Some of it gets taken care of in a transaction. Like, I don't want to buy a property with the seller's mortgage on it, right?
Mhm.
So we're, as a title company, we're going to make sure that that seller's mortgage is paid off and satisfied, so that stick is removed from the bundle. So that collective bundle of sticks equals title.
Mhm.
All right. On a different class, we can go into how different ownerships work, but that goes beyond the scope of what we're talking about today. Okay.
Sure.
All right. So what the heck does a title company do? I'm going to run you through a real bird's eye process. So title company, we don't start anything until we know there's a transaction. Okay. Once we know there's a transaction, we get an order. And when we call it an order, it's usually in the form of a purchase agreement, a signed and executed purchase agreement. That is the starting gun for us. We have an order. Let's get to work. So what does get to work mean? Get to work means, first of all, we enter all the information into our software. I know, a little bit dull, but without that, we can't do our job. And then we order searches. We order judgment searches. We order federal and state judgment searches and tax lien searches. And we do what's called abstracting. And so there's actually a person that their job title is an abstractor. And what they do is they abstract the information at the county and gather it, what was recorded on the property. You were talking about it became, it starts off as a territory, and then it becomes a state, and then somebody starts to own it. They pull all the records associated with that land into one big stack. So what mortgages were filed on the property, who deeded to whom, what easements are filed against the property. Really, we're searching for sticks in the bundle. Okay, we are searching for all the sticks in the bundle. Now, some of the sticks, like a mortgage, we're searching for mortgages that are out there, but we're also searching for the items that eliminate that mortgage. So yes, the previous owner of the previous owner had a mortgage, but was a satisfaction of mortgage filed? And did that satisfaction of mortgage, was it in the right format, that it truly took care and eliminated that old mortgage company's interest in the property? So an abstractor is pulling all that information together. And back in the olden days, this would be a stack of paper. Okay, now it's a digital folder, but it's a stack of paper, conceptually, that then goes on to our examiner. And what an examiner does, I always said, if there are a room full of people and they all work for a title company, typically the examiner is going to be the smartest one in the room. All right. They examine that stack of paper and they determine what items, and think of this bundle of sticks again, what items need to be taken care of for the seller to convey clear title. And I put that in air quotes, clear title to the buyer. What needs to be taken care of? So I call it the things to do checklist. Then they also determine what things run with the property, what things just are part of the property. So I put clear title in air quotes, right? So when I buy a property from a seller, there's an expectation that I own the property. So I have clear title that I own the property. But is it technically clear? Well, it's clear from a conceptual standpoint. I own the property, but the government still maintains the right to collect taxes. The state may still retain mineral rights. The homeowners association still has a right in there to collect monthly HOA dues. And I still can't build the property right up against the street because there are certain setback requirements. So I own the property subject to the things that run with the property. Okay, so the examiner, they put together what's called a title commitment. And this is just what it is, a commitment from the title company to ensure the property that if these things happen, we will grant you an owner's policy. So we go through the checklist and we take care of all those things. And now we can issue, and one of the things is closing. You have the closing. And so now we grant an owner's policy. And that owner's policy says you bought the property, you own the property, subject to the easements that run with the property, the HOA, taxes that are in the future. Okay, so that's what an examiner does. They put together a commitment, the list of things that need to be done, and the list of things that run with the property. And then it moves on to our next department, which is our closing department. Now, closing department has largely two roles, a processor and a closer, and they divide it up differently based on their strong suits. And so, but what happens in the closing department is the processor usually goes through the list of things that need to be done and takes care of the list. It could mean ordering payoffs. It could mean making sure that if there is somebody in title who isn't on the purchase agreement, we address who they are and how to get their interest dissolved. And it can be all, that's a whole different rabbit hole, but we're making sure that those that need to sign to convey the property to the buyer sign. And so the processor takes care of all these items, ordering payoffs, making sure we have judgment payoffs, federal tax liens are paid off, getting all that information such that the property can convey from seller to buyer and the buyer has clear title. Okay, so that's the processor. The closer presents the documents to the buyer. Okay, they present the documents to the buyer, answers whatever questions the buyers have, and make sure that they walk away from the closing understood and understanding what they signed. Okay, so that's the closer. Now, buyer walks away with keys, seller walks away with the proceeds. The title company is still working on this, so we take the documents and we send certain documents that need to be recorded to the county. That's a recording department. Once those documents are recorded, they go on to our final title policy division, which issues the final policies to both the lender and the owner that reflect the title commitment that the examiner produced. So that is the bird's eye view of what a title company does.
Mm-hmm.
All right. So I wanted to share owner's policy. I get this question quite frequently, not all the time, but quite frequently. Why the heck should I get an owner's policy if you, the title company, did your job? And it's a really valid question. Why should I? Well, we got the examiner, the abstractors pulling all this information. We're doing the searches. We have the examiners looking through it and our processors clearing it. But title insurance, although it will cover you if something got missed, that's not as common. I always say title insurance covers you for the thing, the commitment, that's what we know. But there's things that you cannot possibly know, even with the best searches out there. You can't know them. So great examples of that are somebody in the chain of title had somebody sign who was the attorney in fact. They had a power of attorney and signed as attorney in fact for the actual natural person seller. And so if that wasn't done properly, it means that deed from that seller to that buyer can be challenged. And it happens, and it breaks the chain of title. The other that is easily understood conceptually, when a legal entity sells, and think about limited liability company, corporation, or you can even trust is kind of gray zone, a trust. When they sign, there is a determination, do we have the right people signing? And so all the searches in the world, when we look at it and our abstractors pull the information, there is an assumption that that conveyance was executed properly. Because you can't possibly go back every single transaction and ask, were you really the president of XYZ company? So there's an assumption that it was done properly, okay? So if any of those weren't done properly, you can't search it, you can't discover it, yet you could still have a claim. Hey, and I got an example of that. So those, it's not what you know that's going to bite you, it's what you don't know that could bite you. And sometimes it might even be not a valid challenge to title. Somebody said, I own that. Well, at a minimum, you have to hire an attorney for some sort of consultation. And I don't know what legal fees are per hour, but it's likely won't take you many hours in front of the attorney before you exceed the owner's policy premium, one-time fee for as long as you own the property. Okay. So it's what you can't possibly know that will bite you. And so with that, I have a handful of examples of where a title policy saved the day. Some of them, I was directly involved with, where it was us who had to, our underwriter. The other two were where people got a policy, and because they had the policy, it showed up when they were selling, and it was resolved, and the underwriter took care of it. Okay. So one is right back to that chain of title. This one here, there was a transaction, and what happened is, think of a limited liability company, and they had two members to this limited liability company, and these members in hindsight weren't getting along. Okay. And so what one of the members did is they produced documentation that said only one of the members needed to sign to sell the property. Okay. So that member number two sells the property. Member number one doesn't know it. Okay.
Oh, no.
And member number two runs off with the proceeds.
Wow.
Member number one doesn't know it until 6 or 9 months have elapsed.
Wow.
So buyers bought the property. The deed was challenged because only one of the members signed, and there was a huge lawsuit between the members, and it eventually got resolved. And member number two was in trouble. Okay. But the reality is, because they had the owner's policy, we were able to move on with the closing and let that all kind of work itself out. And the underwriter went after member number two, to shake them down for the money and rectify it, at least from a real property perspective.
Sure.
Owner's policy saved the day. This one here wasn't involved with, but it really highlights what you can't possibly know. And there was a case where the property was sold by somebody who inherited it. Okay. I inherited the property and then I sold it. What happened is, years afterwards, one of the heirs revealed themselves to have an interest in it, and they were never served. Turns out they had a valid interest in the property. So their interest was never taken care of. And so this I wasn't part of, but it turns out it was a 1/64th interest in the property.
Wow.
So I think of 1/64th. That's tiny, right? So even a $640,000 purchase price, you think give them $10,000 and they go away. It's not so simple. It's an equal and undivided 1/64th interest. So that 1/64th interest person has the right to sleep at the property, park the car at the property. All the enjoyments of use were available to this individual. Buyer had an owner's policy and was able to have the underwriter resolve the issue. Don't know how it got resolved, okay? I'm sure there was payment involved, but
Sure.
underwriter resolved the issue. Again, the owner's policy for something that all the searches in the world could not have determined who was that error that was out there. So, then I have one that's a DIY thing where they didn't get an owner's policy and we weren't able to move forward. Okay, so there is one lot of land and the neighbors, they had like a couple of acres that they weren't using, so they deeded it to somebody. They did a lot split and they deeded it to somebody, and the lot split was largely done right. And the buyer of the 2 acre put a new home on the property, okay, built a new home. And then they get notification that they're being foreclosed upon, not by their mortgage, but the neighbor's mortgage. And they did a DIY, do it yourself. And when they did it themselves, nobody bothered to get consent from the original neighbor's property owner's mortgage company that they could do the lot split. And thus releasing that property. So when the original owner of the land didn't make their mortgage payment, the lender foreclosed on everything.
Wow.
DIY. And there are a lot of DIY components to this one here. And my goodness, John, that was that when they called and I'm like, I really hope that your neighbor pays off that mortgage. And that's where they were left. And they didn't have an owner's policy. Had they gotten an owner's policy, I believe, and not a DIY, I believe the title, if it was all American title, we would have noticed that that mortgage was encumbering both pieces, and we may or may not have been able to clear it. If we were able to clear it, we're good. If not, then I bet that buyer of that 2 acres would have passed on it. So it's like sort of where the two mix together as to what we do and what we insure. So
Sure.
So I hope those, do you have any questions on some of those examples or bundle of sticks or what an All-American does?
Sure. Maybe just a couple. So, with regards to title insurance, it's insurance. And I know there's at least in the old days, people had the option of getting an attorney's opinion in lieu of insurance or doing nothing.
Right.
Myself personally, I've always been a big fan of insuring risks that are too large to take. And obviously, if I have a large home and mortgage and I can spend a one-time fee to get title insurance, I'm going to buy it every single time because the risk, the liability to me would be way too great to retain. So, and to me, an opinion is just that, what if the opinion was wrong? Well, too bad, so sad. That's why I like insurance.
Yeah, you're spot on, John. An attorney's opinion is kind of akin to when I was describing what a title company does, right? It's like you can do everything right, but it's not what you know that's going to bite you. It's what you can't possibly know. So an attorney's opinion, and based on the recorded documents, that attorney's opinion is, if they're good, even average, that attorney's opinion is going to be accurate, but it's what you don't know that could bite you. And that's where the insurance comes in. And it's most people, it's your largest asset.
Yep.
It's your biggest asset. And one-time fee, peace of mind. This is where I gotta, like, I'm too much of a title. I really see the value in what we do. Yeah.
Now, with regards to that value, so let's say it's my understanding that let's say I bought a home for let's say 600 grand and now it's worth $2 million.
Right,
That so that there's a big equity position in that home. So let's say that is the case. That my title insurance will protect me and i.e. then protect my equity by fighting whatever it takes so that I can have my title clear so that I can sell it or pass it or refinance it or whatever I need to do.
right.
Is that the case?
Well, here's how that works,
Okay,
okay? There's a whole rabbit hole here that we're not going to go down today.
sure, sure.
And describing the difference between a standard policy and an expanded policy. Most residential use properties have the ability to get what's called an expanded policy. Okay, most. It can't be new construction, which is a vacant land, and it's got to be a natural person who owns it, and trust might count, but it can't be an entity, and it needs to be
Okay.
residential. So with that policy, you get an automatic increase for the first 5 years of 10%. Okay.
Okay.
But it is still limited. Now, when it comes to a title policy, you think about chain of title. We talked about that earlier. That's where the entire value could be gone. And usually, even when it's decided that somebody had an interest, they typically look at the interest at the time they had the interest. So if you did the improvements, they wouldn't necessarily have a, not to say it's not a big headache, okay? So usually, even though the premium, 600,000 to 2 million, that 10% is not going to cover it.
Hmm.
But you still have title insurance there up to that amount. But I have, and I've been doing this for over 3 decades.
Oh,
I haven't seen it where the original full improvement costs being insured wasn't enough title insurance to get the job done.
to fix the problem, sure.
Yeah, yeah. And there are, and again, another rabbit hole we're not going to go down. There are mechanisms to increase that. It's not free, but there are mechanisms that if that's truly your concern, that it could be modified upward based on the improvements and a new title search.
Okay.
Yeah,
Another question about, let's say, a letter of undertaking. So it's my understanding that if there's, let's say, I need to sell it or refinance it, and there's a problem from a previous title company, and all of a sudden it's going to take, a quieting of the title or whatever it might be, and I'm going to be held up for months, but I don't have months.
right.
I'm closing tomorrow. What do you folks do in that case, or what remedy is available?
Yeah, so let's say there, like you said, there's a title issue, and we know some sort of legal action will resolve it. So, couple of things, and there's a lot of variations here. So this isn't a magic wand. If it's quantifiable, and we know, like if we think we got errors and we don't know who they are, no letter of undertaking is going to make us at All American Title or our underwriters, giving us that cozy feeling that says this is a
Hmm.
good risk. If it's quantifiable and we have an attorney that has a good reputation, we'll take a letter of undertaking from that attorney
Okay,
and escrow their legal fees, 1.5 times their legal fees, and be allow the transaction to go forward. There are a lot of if thens in there, and it's not, like I said, it's not a magic fix all every time type thing, but it's a potential option
sure.
that we're able to utilize.
Okay, awesome. Now, another thing you see all the time on the radio, well, yes, you don't see it, but you hear it on the radio and you see it on TV, are the title lock, and you better get title lock insurance or else somebody's going to steal your title. Can you just talk about that for a second and
Yeah,
how that
it's
intertwines with
yeah,
auto
and
policies?
I can't, I can speak to what title lock does,
Okay,
but I can't speak to whether or not it's right for somebody. And then
sure.
I can differentiate that from what title insurance is, and I
Perfect.
can speak to that. Okay.
Perfect.
So what title lock, this is my understanding.
Sure.
Title lock basically gives you a notification if there have been any amendments or changes to the county records as it relates to your property.
Okay.
which then gives you, hey, a red flag. Something's happened and I didn't do it. Okay. The piece I don't know, and I'm trying to read through the fine print, does it offer you any coverage? I don't know. I think the last one I read gave you the ability to have access to their legal staff in order to defend it, but I wasn't clear as to if you got some time free or what that was.
Sure.
So title lock definitely gives people an alert that something's happened to your property, and whether you were had a hand in it or not is for you to decide. Okay. What title insurance does, if something happens to your property, then you'll have insurance for it. But I got to be careful here, okay? Title insurance, title insurance is an insurance of indemnity, not casualty. So, a couple of words here.
Hmm.
Casualty is something that's going to happen in the future, okay? Indemnity is things that have happened in the past, okay? So, but remember I was talking about the expanded policy versus the standard policy?
Hmm.
There are aspects of title insurance with the expanded policy that give you coverage going into the future.
Hmm.
One of them being fraud. So I used to, well, a different class. I won't go down. I'm filled with stories, and I'm going to try to. But one, and that's where I will go and take a deep dive on what does an owner's policy cover. And when I go into that, you can't talk about it without going over the bundle of sticks. But so LifeLock, or yeah, is it? It's not LifeLock. What is it called? Yeah,
Title,
title lock. Yeah,
title.
yeah, yeah. That cover that gives you the alert. Title insurance gives you insurance, and
Mhm.
in some cases, residential natural person owning, if you get the expanded policy, insurance going into the future.
Okay. Now a closer is going to have that added to the closing statement, and you can opt out. Are they typically adding the, I'm going to say the expanded version so that I don't have to ask for it?
I can speak for All American Title.
Okay.
Okay, All American Title. It it wasn't always the case. Okay, but for the last 3 to 5 years, we default to the expanded policy whenever we can grant it because the consumer's expectation is that's the kind of coverage they want.
Yes,
Okay.
absolutely.
And so we default to that whenever we're able to give it.
Okay, good to know.
Yeah.
Good to know.
Yeah.
Now, All American, they're across the Twin Cities and they work across the state, correct? Can you tell us a little bit about your locations and how
Yeah. Yeah.
somebody could work with
In
you?
the metro, we have 3 regions. Okay. And so we have our metro region, and currently we have our Maple Grove, Blaine, Edina, Egan offices. Okay.
Okay,
In Roseville. I don't go there very often, so my mind forgets about Roseville, but we definitely are in Roseville. So that's our metro footprint. Kind of cool thing about that, it doesn't take more than 20 minutes to get from one office to the next. So it's a beautiful footprint.
hmm,
And then we actually have 2 other regions. Perham, kind of the Detroit Lakes area, loosely speaking. We have an office in Perham. And then we have 2 offices on the Iron Range in Hibbing and Virginia.
hmm,
And it's fantastic footprint because when it comes to cabins and lake homes, our Virginia
hmm.
and Hibbing does a really nice job up that direction. And lake homes the other direction, our Perham office does a fantastic job. And it just, we work with a lot of different teams. And when they have somebody who lives in the Twin Cities who's buying a lake home, it's just nice to work with the same people if you can.
Sure.
So our footprint is absolutely fantastic.
That's awesome. And then with regards to selecting a title company, now that's always the buyer's choice.
It is.
Whereas, sometimes, I'm going to say I work at Remax and we're independent and we do have a title company and a mortgage company. However, we're not required nor directed to use them, and I typically use independent people.
Mhm.
But some of the bigger companies that are not as big as our Remax franchise, but the other two big ones that are in the Twin Cities have their own sometimes, and I think
Yeah.
buyers are maybe directed out of ease to their own in-house. But let's say you're a buyer watching this and you're like, you know what? I can relate. I can connect with Dan. I like All American. I want them to do my title. Well, I just want everybody that's watching to know that you don't have to use your in-house box company and be vertically integrated. You can do a la carte. You can hire All American. You can go independent. And as you can see, they're extremely knowledgeable. Not that the box company a person isn't, but you're typically not going to get the same pricing, in my opinion, because they're not competitive. They don't have to be, whereas All American does. So with that, anything you'd like to speak about that? How
Yeah, yeah, and I'll speak to the metro area here. And so really when it comes right down to it, the price difference as it relates to the purchase of your home as defined as a percentage is 0.000001.
uh,
It's so you could save maybe different scenarios, different price points. You might be able to save $100 here or not, but it really comes down to how the sophistication of the title company. And we at All American Title, we have a set, and not everybody does it this way, some do. We have it set up where every closing team has somebody with at least 10 years of experience. And they recognize when they don't know something, and if they don't know something, they have me to call. And if I don't know something, I have a direct line to our underwriters. When they don't know, which happens, I have a direct line to my colleagues within the industry. And
okay.
so, being in the industry, as long as I have, I've developed really respectful relationships with competitors. Competitors, we work together. Main goal is to make sure buyers get a home and the sellers sell a home.
Sure.
And so that's the number one goal. But with that, I will reach out to my colleagues that don't work with me and, hey, have you seen this? And so it's that connection and the speed at which it can happen is what I love to speak to what All American Title does well. We do that really well. Recognize the issue, answer it if we know, or kick it up or over to get the answer as quickly as possible. This isn't the day where we can wait a week to get an answer. And even when we don't have an answer, we'll communicate, hey, we're working on it. We don't have an answer. This is what we've done. So our communication.
Is there a typical turn time on a file just from start to finish?
I
Ordering
can
it.
tell you what our promise is, okay?
Okay.
And this is probably 95%. It's 5 days. So,
Okay.
and this is
Hmm.
Metro. And so how do you define 5 days? We get the order on Monday in normal business hours. We get the order on Monday. Our goal is to issue the commitment by end of business on Friday.
Oh,
Yeah.
okay. That's a quick turn.
Yeah, yeah. And that answer, if for that's for the metro, as are outstate, there might be different ways of searching that aren't as readily available, and it can be extended. But for your typical residential transaction, our goal is always to issue the commitment in 5 days, so Monday to Friday, not including bank holidays or
Wow,
weekends. Yeah.
that's fabulous turn time. Uh, so if somebody's watching this video, whether it be a home buyer, home seller, or a real estate agent, and they want to learn more about your company, you have an associate. Her name is Grace,
Mhm.
that I believe that they could reach out to. And I'll put her information in below the video.
Perfect.
If they had other questions, I mean, you're obviously we could probably go for days here because of your
Yeah,
knowledge
yeah,
base.
yeah.
And it's been wonderful. You've
I
been just
warned you.
fantastic. No, 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 it's great. And we've just scratched the surface. But if somebody
Yeah.
had a specific question about title or your company, could they reach out to you as well?
Yeah, 100%, 100%. And you'll put my contact information there as well.
Yes, I will.
Okay, beautiful.
So for
The
orders,
only thing,
yeah,
yeah, I got one asterisk that I put behind it. A title company is not a law firm,
hmm
okay? And if we're actively working on it, then we can help you out. But that being said, I can point you in the right direction.
sure,
Sometimes the right direction might be you need to contact an attorney.
sure,
Okay. There's sort of
absolutely.
an expectation thing there that I want to just get ahead of. And I'll be as helpful as I legally can. There
That's
you go.
wonderful.
All right.
That's wonderful. Well, great. Well, is there anything, Dan, that you'd like the audience to know before we close up the video today?
I just thank you for having me today. You might have gotten a sense that I am a self-proclaimed title nerd. I love what I do. I see the true value in the product we offer to buyers and the service we give to buyers and sellers and the agents and the lending partners they work with. I believe in what we do at All American Title, and I'm pretty sure how many people geek out on title insurance? Me, the
No,
room's kind of void of a lot of people. So,
no, your
so I'm
passion
just
and
grateful that you had me today.
absolutely. Well, I really appreciate you coming on today. Your passion is, loud and clear. I can see that you love what you do, and that, that is very clear for anybody. And I know you're going to have a wonderful experience. Anybody that would like to use All American. So I've worked with them in the past. They've done an excellent job. You won't be disappointed. Uh, like I say, Grace will direct you to a closer that will be appropriate for your area. Dan is the brains of the operation here, so he'll he'll be organizing everything behind the scenes for you. But if you do need to speak with him directly, you can, and that just again speaks to the accessibility of their organization and how they want to cooperate, how they want to work together, and how they want to have a seamless, excellent experience for the consumer and the seller. So with that, Dan, I'm going to thank you for coming today, and I'm going to go ahead and stop this recording.
Thank you so much, John.
Thank you.